Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I was presenting the part 1 of Tracking the Forex Market Together webinar between 8 and 8:45 GMT. Now this is part 2. So during the part 1, I have taken positions in the case of Euro and GBP. I was explaining to you on what basis, following the type of moves, I had taken the positions. And I'm going to show you the result and how exactly I'm continuing with the trade. And those who have been tracking from that of the part 1 might be knowing that those positions are making profit. So it is a simple market tracking technique and effective trading strategy because our forecast can be about 90 to 95% accurate. Still, if our trade falls in 5% of the non-accuracy, then we might lose the money. There is no point in telling that my forecast is relatively good, and if I continue to take wrong positions, and account could be reduced. So we have to use the effective trading strategy as long as we are human, because we are bound to commit mistakes while taking quick decisions when the market is making quick moves. So I'll be explaining more pertaining to that particular aspect. Before going to that, let me just briefly show you the result of the trades, what I have taken during that of part 1 of the webinar. Now, I just compare it with that of the live market quote page and then explain to you the results. Now, if you find an interesting aspect is happening in the market, in the live market quote page, you will be able to really see how exactly the players are making the contrarian moves. So now you find that Euro, USD yen, GBP, USD CHF, and USD CAD, and also Australian dollar, all are showing positive net change. So this, we will not be able to get it, what they are trying to do with the help of the charts. So from that of previous day close, they are showing all the currencies in positive net change. That means they are continuously gaining slowly in all the currencies. When they gain like this, you will find the respective crosses like Euro yen, GBP yen, and CHF yen, USD, Euro Canadian dollar, Euro Australian dollar. All the currencies are bound to make the positive net change. If you find in the case of crosses, you will find all the crosses excepting a few are showing positive net change. So this is how they handle the majors and the crosses alternatively. So now what happened to the positions? I was during that of the European session, I just showed the initial lows and the highs which are taken. So I'll just show the slide again. In the case of Euro, 1.3560 was the initial low. They breached it by 2 pips and then they came up above that after the start of the European session. So I taken a buy. And I had taken a buy around 1.3565. Near that of the low, we tried to buy it. Then, at that time, the high was 1.3582. So, 1.3582 was the initial high. And when they come closer to that, hardly it is about 15 pips or so from that of the entry. So, when they just gained in the live market quote page above that of 1.3575, I just started moving it 30 pips away from the market, 30 pips away from the market, and keep stop at entry and move it upward. So the take profit is moved and also the stop is placed entry. Okay. Now, why I should do like this? I may not supposed to close it within the session, and instead I am trying to maximize the profit with regard to this particular trade. I'll explain to you on what basis I am taking such decision. Now, so they cut the initial high 1.3582 and gone above and staying above there for more than 30 minutes, and you find that They are just staying above from the start of the US session. And US session starts by 13:30 GMT. 30 minutes past, still it is above that of 1.3582, and they are expected to continuously and slowly gain the levels. When they intend to slowly gain the levels, I will try to keep the stop at entry, then try to move it, keeping 15 pips below that of the market. So currently it is about 35.95. We can keep it $1.3580. So we keep the stop in order to protect a minimum of 15 pips profit. And maximum, it can hit 1.3634. And if they continue to move upward and come closer to that, I'll move another 30 pips and watch. And move the trailing stop also from that of the entry point. And trying to protect 30 pips. So every 15 to 20 pips gain. And when they stop cutting the new high, I will try to keep the take profit level at the higher level and also keep the trailing stop at the tighter to that of the market. This way, we'll be able to maximize the profit. It is not simply using a stop is money management. And many people think that money management means we have to keep this tight stop. And immediately people ask how many pips stop. Okay, you keep the stop below that of the support. And invariably find that the players are hitting the stops below that of the support. And we call it as a noise, but we lose the position and nobody explained how to avoid such things. So basically what we need to understand is, it is not merely the limiting the risk, and we have to maximize the profit. In a single trade, we should be in a position to maximize the profit and continue to rise the take profit level as well as the trailing stop from that of the profit-making position, so that the market can either hit your trailing stop or the limit, and so that you'll be able to maximize the profit in a given time. When they are doing a move of this nature and also hold above that of the initial high, 1.3582 for more than 30 minutes, until end of the session, they are supposed to rise. For that, we need to understand when they have cut 1.3582. And if you notice, they made around 10 GMT a quick drop. If you look into that of the chart, probably you will know when exactly it has happened. Those who have watched the live market code page at frequent intervals would have noticed that they made a quick dip in the case of Euro to 1.356562 level, whereas in the case of GBP, they made further drop below that of the low. I'll explain to you when I take up the other trade. So when GBP was trading around 1.604443 level, that was the low they are set during that of the European session. But during that of the Asian session, the low was 1.6074. So the initial low was 1.6074, but subsequently they came down below that during the Japanese session. And I was explaining to you that they wanted to make an extended downward move for about 2 hours and start gaining the levels. So after understanding this, what is the type of move they are doing it, I just entered around 1.6049 when the market was around that particular level, and they formed the low 1.6044, and subsequently they cut the low by 1 pip, and still they are not gone below that afterwards. But if you look into that of the live market code page, they formed the new low 1.6021. I kept the stop at 1.6019, and they made the quick rise in the case of GBP towards close of the European session webinar to around 1.6075, and then made one quick drop of 50 pips and hit all the trailing stops and quickly gained it to 1.6080. So when you enter closer to the low and keep 30 pips below the hedging order, then your hedging order is not likely to be filled at that time. But in case if they fill it also, you can quickly close it with a nominal loss and keep another hedging order to limit the risk. Always you keep it in mind that they are cunning. So they just make a one downward quick move using some trigger around 10 GMT and then subsequently started gaining the levels and gone above that of the initial high. What is the initial high? During that of the Japanese session, 3:30 GMT, it was 1.6100. And now they have gone above that of 1.6100 and comfortably staying above this. And we may think that, okay, initially 1.6100 is the psychological resistance and they have come down and then subsequently it is gone and they are staying above this. And probably the next resistance we'll try to understand and try to take a sell. But keep in mind, from the start of the US session, they slowly cut the initial high and gone above. When the move is very, very slow and slowly they are absorbing all the sells coming from the market, they gain about 20 pips and drop about 15 pips or 10 pips and gain about 10 pips, drop about 5 pips. That sort of swings they are doing it. And so that people might think that, okay, it is not able to go beyond 1.6145, the next resistance level, so it is better to sell. Then you find whenever they make a slow move of this nature, they will continue to rise till end of the session. When they have breached the initial high during that of the late European session. So they have to make the move for 2 sessions and start of the 3rd session. Only then they will reverse. And I have been telling you that they make the extended move and followed by that an intentional move. The extended move was on the downside and they made one whipsaw move also in the case of GBP to hit the trailing stop. They know very well many traders would have taken the buy positions and they hit their stops and then gone upward. Gone below that of 1.6043 and came down to 1.6021 and then reversed and quickly gained above that of the high there set 1.6074 and 74, that was the initial low and the initial high was 1.6100. They had gone above and comfortably staying here. So if you think that Euro is not able to go up or GBP is not able to go up, it means they are not having the life. And if they have the life, then we can say that they are able to go up or not able to go up. But they are inanimate and they are nothing but the ratios. And they have to be moved by somebody. So we have to find out who is moving it. And when somebody is moving it, why not we read their intentions, whether they want to take it upward or downward. So by understanding the type of moves, we'll be able to say, okay, they intend to gain the levels. Before that, they have made a cunning move of a downward stop in the case of GBP, and they just made a brief downward stop in the case of Euro. So what attribute you can give when all the currencies are in positive net change? Because Euro, GBP, and Australian dollar are showing the USD weakening move, and USD USD CHF and Canadian dollar are showing the USD gaining move. And if you look into that of the US index, you may not come across much of a change because they are showing the USD weakening move in 3 pairs and USD gaining move in 3 pairs. They get compensated and hardly you come across any movement. So when you try to read the market, if you use some other instrument, they can misguide like this. That is what we need to understand. Besides, when Euro is gaining only 7 pips, they gained about 31 pips in the case of Australian dollar and 14 pips in the case of GBP. And when USD is gained about 38 pips, they gained only about 11 pips in the case of CHF and 16 pips in the case of Canadian dollar. So don't try to compare or relate the currencies. Try to find out what currencies they are moving at a given time and try to find out what trade we can do. And because we cannot take a basket of trades like taking positions in all currencies, and as small traders, we can only choose one particular currency and take a position and book profit, then look into that of the other currency. So when you have that particular limitation, we have to fine-tune our market reading. Only then we will be able to successfully earn money from that other market. The institutions might trade differently, or the big player or the other analyst may trade differently. Ultimately, what trade setup will work for us, we need to understand. So, still, I am continuing the trade. So, I will try to move the limit till end of the US session in the case of Euro, and I have not kept the limit. And we can keep the limit in the case of GBP also as 1.6168. And normally, when you see that they are making a contrarian move, they can go only up to about 75 pips maximum. And when they are making the USD gaining move, they can go up to 150 pips in the case of Euro and GBP 150 pips. But when they are making a contrarian move of this nature, then you will find invariably it will be restricted to about 75 pips. So 75 pips net change. That is the important thing with regard to the net change which is given here. And when they come to that level and stop high during that particular late session, you can simply book profit. And obviously you will come across again after the continuation of the intentional move, that will be a slow move. And during the slow move, they will just make a downward stop and during session start, and also swings during the mid session. And late session, they will start continuous the gain as a continuation of the intentional move. So we will go into the type of moves again for those who have not attended the earlier part, the European session, what I explained. Then I'll briefly touch upon all those, how exactly we have to go about in making the market reading. Now, so my trading strategy is mainly using the derived forecast. So the derived forecast, I give it on Monday during the Asian session live market analysis, and those of you following me will be able to understand. And this is being recorded. This is what the forecast I have given it on 7th. And so you find the dip, rise and slide, a small dip, they have done it and then subsequently swing, and they are expected to swing and rise. And so this is the forecast we follow. Followed by that, we do the market reading. So what is the market reading? We have done it. So we note down the initial lows and the highs around 3:30 GMT. So here you come across the initial lows and the highs in the case of Euro and GBP. Those are the currencies I have committed positions. So we find that they are trading now above the initial high in the case of Euro as well as GBP. So that means they made a downward stop and below that of the initial low, and then they gained the level, swing and gained the level during that of the late European session and gone above that of the initial high. When they stay above that of the initial high for more than 30 minutes during the early part of the US session, we can try to take a buy position. Even now, we can take a buy in the case of GBP and in the case of Euro. Let me take the positions as well. And that is referred as a technical trade. And in the technical trade, I'll just commit the positions and later on I'll explain to you. So I'll try to take a buy. A buy position in the case of Euro, because 1.3582 was the initial high and 1.3587, I'm just taking it. And the stop, you can keep even a tight stop, or we can keep 30 pips below, and we can keep a tight stop below that of the initial high. So, but here I'll try to keep 30 pips below 1.3557 as the stop. And in the case of GBP, and it is trading around 1.6109 and 30 pips below the stop. 1.6079. Then somebody asked, will you be able to explain with regard to trading the cross? So probably I'll take any one cross. So for that we need to find out what cross is suitable. So now they are making the positive net change in all the currencies, in the majors and two commodity pairs. So we need to find out whether euro yen, whether it is closer to low or closer to high. It is made about 62 pips positive net change. And it is in the closer to that of the high. Then euro GBP, and it is in the middle, it is closer to that of the low, 84.35. After the drop, we should not sell. We should always try to sell near that of the high when they are making an upward stop, and that will be a safe trade. Any level, we can take a sell now. They intend to make a drop, but that is not the wise way of understanding the market. When they are closer to high and stop cutting the new high for more than 30 minutes, during the mid-session, we can try to take a sell. But now they have dropped it, and we cannot buy it because it is showing negative net change. And you find that euro is showing 7 pips positive net change, whereas GBP is showing 11 pips positive net change. They are trying to hold euro and try to gain some more levels in the case of GBP in order to make a drop euro GBP. So euro CHF, when you see that it is close to the high, but the spread is less. Always in the case of cross, understand that the spread should be more than 70 pips in order to enter into a cross. So it is not wise to take position there. Here it is there, but it is close to the high. Since they are trying to rise all the majors in the commodity pairs, and these crosses are expected to gain further levels, but they are not closer to low. They already gained the levels, keeping only 20-30 pips below that of the high. So it is not advisable to buy because I have not noted down the initial high here. If we know initial high, then probably if they hold above that of the initial high for more than 30 minutes during the mid-session, then we can try to take a buy and they will try to continue to rise. So always keep it in mind that whenever they are making a USD gaining move or the USD weakening move, like Euro GBP and Australian dollar showing positive net change, and USD yen and USD CHF, also Canadian dollar showing negative net change, that means they are making USD weakening move. But if they are making negative net change in Euro, GBP and Australian dollar, positive net change in USD CAD, USD CHF and Japanese yen, that means they are making USD gaining move. Whenever they are making the USD gaining or the USD weakening move, understand that they are focusing on the majors. That is, all the majors related to that of US dollar. So they are trying to handle those currencies, especially the majors in the commodity pairs. At the time, the crosses might be making very less move. Whenever they make a contrarian move of this nature, then trading the crosses will be very, very easy, and we will be able to really make a good profit. But what they do is, yesterday, if they have noticed carefully, they have been doing a downward move in all 6 currencies. At that time, all the crosses were making a downward stop, and they made the week beginning downward stop and accumulated the buy positions. And afterwards, they started gaining the levels now. And why they are gaining the levels? It is not bullishness. They are buying it at a higher level. No. They are just quickly doing the circular trade and gain the levels and induce the traders to sell. And absorbing all the sells, they try to make one quick upward move and then book profit with their buy positions. At that time, we become bullish and we say, okay, Euro Yen is bullish, GBP Yen is bullish, and quickly buy. And later on find that they don't make further rise. This is what happens. When you turn bullish or bearish, then the players can easily make you to lose the money. And stop using the words bullish and bearish, because a gain of 50 pips or a drop of 50 pips is not bullishness and bearishness. They are a part of the market swings. So when you use such words without your knowledge, you become sentimentally attached to such phrases. Then you find extremely difficult to take a buy when you develop a bearish sentiment. And similarly, you develop a bullish sentiment, then you don't mind after the rise making a buy. Then you commit wrong trades. So understand that you are responsible for it. People are here to convince you. People are here to induce you to take wrong trades. But you have to be smart enough. And you should be in a position to come out in a unhurt manner. That is your skill set. So if you look into the cross, you find that the crosses are making a lesser move. Yen crosses are making about 63 here and JPBN about 68 pips. The rest of the European crosses are making nominal move, and the commodity crosses are making somewhat slightly bigger move. So we need to find out which currency is closer to high or closer to low. And since they are gaining all the levels, we can do only buy and sell trade. And now, since it is the beginning of the session, none of the currencies, or especially the crosses, are closer to low or closer to high. So when it comes to mid-session, probably you just look for it. And if you come across any good currency which is closer to low, then try to take a buy. And since they are making positive net change in all, don't do sell and buy trade. At least avoid that. So this way, with the help of the live market code page, you can fine-tune your trading decision with regard to trading the crosses. You know that when they gain about 11 pips in the case of Euro and 36 pips in the case of USD Yen, they are able to gain about 64 pips in the case of Euro Yen with regard to the pip value. So this is how a cumulative effect is seen in the crosses. So that you need to understand. So it is not that the cross moves influence the majors to make the moves. That is what they interpret most of the time. But actually, they make the moves in the majors and make the swings and induce the traders to commit wrongly in the crosses. And then later say that in crosses, heavy selling happens. That is why Euro has dropped or GBP has dropped and things like that. So always they try to misquote. We have to understand that. So here I have taken two positions, and the European session positions are still there. End of the US session, we'll be able to see whether the targets are achieved. Now coming to the explanation part of it. So as I explained that I take the forecast, which is derived based on an algorithm or a sequential statistical analysis using various factors which are influencing the market, and later on do the market reading. So note down the initial lows and the highs around 3:30 GMT. This is what you find on a daily basis. This is what I displayed during the Asian Session Live Market Analysis webinar, and then try to find out whether they go below the initial low or go above the initial high, and how long they stay there. That is most important thing. And that will give you what type of moves they are doing it. And besides, the trading strategy is based on the forecast and market reading. We decide on the entry and the exit. And during quick market moves, we are able to, without any fear, we are able to take the positions. And then later on, we try to keep stop at entry once the position makes profit and trail the take profit level as well as the stop in the entry level and maximize the profit. So today I thought that since they are doing the intentional move during the European and US session, I wanted to show how exactly the maximizing the profit can be done. It's a very simple technique, and here we try to get the maximum profit out of a single trade, so that lesser exposure and more profit. Because many traders think that scalping is the only way to make money from the market. That means they are not able to develop the market inside. They are not able to see how exactly the market is expected to make the big moves. And they know very well the currencies make big moves, about 100 to 150 pips net change level. But they fail to identify that. So once you focus on small profit, then you fail to focus on the big profit. I'm not asking you to look for big profit and hold a loss-making position. You have to use the hedging order, and once the position makes profit, keep stop at end, then try to maximize the profit, looking into the long-term direction of the market. Now, these are all the session timings. Now, you find we are in the US session, 13:30 GMT it starts, and currently it is 14:30 GMT. So till 15 GMT is the early session. 13:30 to 15 GMT is the early session. Then 15 to 19 GMT is the mid session, during which they handle the crosses. And late session is from 19 to 20:30 GMT. At that time, you will find quick gains in the case of Euro and GBP today, and you will be able to book profit during that time. So my advice will be enter during that of the early session and exit during that of the late session. Understanding the type of moves. Okay, what are the type of moves? They make a move in three formats. One is less than 30 minutes move. During session start time, during that of the European session, I just shown you how in the case of Euro, they just made a downward stopping for 2 pips below that of initial low 1.3560 by 2 pips and started gaining. And then they gained above that of the initial high 1.3582. I showed it in the initial lows and the high setup or the slide, and now they formed 1.3601, still holding about 1.3592. So when they hold more than 30 minutes, then it could be either extended move or an intentional move. Extended move can be differentiated from that of the intentional move, because during the extended move, they will make quick moves. Whereas during the intentional move, they will make a very sluggish move. And immediately we develop the feel that Euro does not have a strength to go above 1.36. Or GBP is hesitating to cross 1.416146. Like that, we just presume. But the players know when they set the market like this, immediately also send the information or sentiment through various channels, and various experts talk that, okay, no, GBP does not look like going up beyond this. And people talk about the shutdown, people talk about the recession, uncertainty, etc. Then immediately you feel like booking profit and taking a sell position without understanding they are making intentional move on the upside. So extended move is always a quick move. That is why I always say that quick moves are false moves in the market. And whenever they make a quick drop, then during the European session, I showed you that they made the extended move beyond 30 minutes up to 2 hours. They just came below that of the initial low 1.6074. 1.6074. And then subsequently, they gone above and made one whipsaw move and gone above 1.6043 and went up to 1.6074, the initial low, and came down heavily to 1.6021 and then gone up. So how clever they are. No, even though you study statistically or you use various methods and find, okay, we can take a buy position in the case of GBP so that they will make a definite rise. They made the rise. But if you simply keep a stop below that of the support or below that of the initial low, what would have happened? They will simply hit. So instead, if you enter during the downward stop or an extended move, then they cannot hit your stop. It is simple. So you outsmart the players because they have the limitations. As long as they are human, they cannot drop or rise 1,000 pips, 2,000 pips in a currency all the time. So they have the limitations. Understand the limitation and then try to take the positions. Then you will be able to easily earn money from the other market. Now, if a move is for more than 2 hours, then we are sure that they wanted to make an intentional move. Also identifying if it is a slow move, it is an intentional move. Slowly they are making a swing and then gain. Slowly making a swing and gain. Then what happens? They continue to gain for above that of the initial high for 2 sessions and reverse only from the early part of the 3rd session. So they started during the European session. They are just continuing during the US session. And tomorrow, Japanese session, they will make one quick upward move and then reverse it. So you are able to predict if you identify the type of moves. And in between, during that intentional move, they will make the swings and also the stop and during the session start time. So that you need to keep it in mind because it is for a longer duration, 2 sessions and the start of the third session. So nearly about 18 hours. So they cannot continuously rise 18 hours. They have to make the swings in the market. Only then the traders commit wrongly and also perceive the market wrongly. And interestingly, if you notice, Australian dollar. As far as Australian dollar is concerned, the initial low was 0.9412 and the initial high was 0.9448 and they made a substantial gain of about 40 pips from that of the initial high in the case of Australian dollar. And normally what they do is the Australian dollar is known to lead the rally and lag behind. And last week what they had done, they lagged behind for 2-3 days and then subsequently rallied it. So this week what they intend to do, rally it for 2-3 days from the start of the week and then lag behind. So if you watch it, Thursday, Friday they gain, Monday, Tuesday, Wednesday they gain, and Thursday, Friday they drop. So you understand the cycle. They are doing it in the case of the Aussie. And they are making very subdued moves in the case of Canadian dollar. So don't simply become bullish or bearish, simply looking into the levels. Understand what type of moves they are doing it on the intraday basis, on the weekly cycle. In the weekly cycle, I have explained many times the type of moves, namely the week beginning false move on Monday, then subsequently during the trending time, then Tuesday, Wednesday, they make the volatile moves, either way stop, and Thursday and Friday they gain the levels. And so this is what during the trending time. During the trend reversal time, that is month beginning and the month end time, they make the gain and the drop alternatively. Then it gives the confusion to the traders. So understand the type of moves they are doing it for the intraday, if you are an intraday trader. And also if you want to do position trade, know about the type of moves, what I have been giving it in the form of forecast during Asian session live market analysis on every Monday. Then also you try to follow that how exactly during the trend reversal time and the trending time they make the weekly moves and the monthly moves. That is month beginning and the month end they make the trend reversals. So market is bound to make volatile moves. Only by making volatile moves they can confuse and grab the money from the traders. But we have to read them and laugh at them when they are making such cunning moves and make use of it as a big trading opportunity and grab the profit and run away. Nothing more than that. Okay. Now the trading strategy part of it. So we take the position, keep 30 pips stop loss, and if the hedging facility is not available in the US platform, then subsequently once the position makes profit of 25 pips, keep stop at entry and remove the other stop what you had kept earlier or move the stop to that entry level. Then keep the exit level or the take profit level near that of the high or slightly above 45 pips. You can easily, they will give it. And so you can keep about 45 pips from the current market level limit, and you should be able to see that it is getting filled. And if the going is good, when they are not making contrarian move, when they make a visible USD weakening move, then you could be able to get about 75 pips. And if they make very strong moves, then you should be able to get 150 pips move. So always see that you are able to capture, buy near the low and exit near that of the high set for the day. And if your objective is like that, at least you should be able to get about 75 pips in a given day. Capturing about 10 to 12 pips and say that I had done the scalping, etc. Invariably what happens, you avoid keeping stop. And when they make quick moves, you lose all the money you earned as 5 pips, 10 pips in 75 to 100 pips move against you. So there is no point in making such trades which make you distressed. We'll be staying in the same place where we have started with the equity. So we are focused to build our equity. If you want to build our equity, then we have to take less risk and more reward trades. So less risk trades, as I explained, that during the start of the session, they handle the majors, and during the mid session, they handle the crosses. So we focus on the majors because especially Euro and GBP, they make the volatile moves. So even if you are caught wrongly, and even if you are not kept stop, you should be able to use the trading strategy to exit out of it with a net profit. Whereas if you take positions in the case of the denominator currencies, you invariably come across they make the one-sided move or hold it near the low for a prolonged period or consolidation. You lose your patience. So as small traders, focus only on Euro and GBP. You'll be able to earn. Don't have any sentimental attachment. Don't think that I should trade today N or I should trade today CHF. And when they are just made less than 40 pips spread in the case of Euro and GBP, simply watch. And when they increase the spread between the high and the low, more than 40 pips, you try to enter into those currency near the low and grab the profit. Not necessarily all the time you need to hold the position. Be an opportunistic trader. And when the good going is happening, then you try to take the position. You will be able to really make quick profit. For that, you have to look for quick moves in the market. And one of the time they make quick move in the market, namely the data release time. And during the data release time, I just observed various forums, chats, and also some of the experts giving the analysis, etc. They always caution the trader not to enter during such time. But the traders really want to enter into that time because they find very quick moves happening at that time and they'll be able to capture the profit. Only thing is they do not know whether to do the sell and buy trade or a buy and sell. It is simple. But if you follow that before the data release time, they will make a false move. When they make a dip before the data release, and be assured that they intend to make a rise. It might be non-farm payroll or BOE interest rate or ECB press conference, whatever it is. When they make a small dip and hold closer to low and make downward stop at times, be assured that they will make a rise after the data release, after the speech, irrespective of the speech or irrespective of the data release. So you can then understand the data release time is nothing but the trigger time, and it does not give you whether they intend to make an upward move or a downward move. And normally you come across that we go into the details of the economic conditions of various countries and focus on that, fail to understand the simple moves they are doing it in the market. And you make one simple question before the data release, about 1 or 2 minutes before the data release, you come across the market becomes very quick, and even in your MetaTrader platform, you will find the quotes are making very quick moves, up and down moves, and you become really nervous whether your stop will be filled. And invariably, you take a decision not to enter into the market during the data release time. That means you have developed the market fear. And once you develop the market fear, you cannot master it. Once you develop the fear in driving a vehicle, will you be able to drive the vehicle afterwards? No, not at all. That means you fail to develop the road sense and fail to control the vehicle and move along with that vehicle. So if you want to become a successful trader, you should be able to view it as a trading opportunity. Such volatile moves. After all, human beings making the moves against it. It is not natural calamity. If natural calamity happens, suppose earthquake comes or a high-rise tide comes, then you won't be in a position to take a decision because how far the tide is going to affect or spill over. So invariably we have to run helter-skelter. But it is market, men market. And we know very well the men try to create the confusions and induce the traders to make wrong positions, take wrong position, and later on trap them. So if it is man-made and artificial, will you not be in a position to read it? And there are people who try to read how the magician is making some magics. And if you closely watch, without being influenced by his talk, you'll be able to find his handwork. So it is simple. So without going to the distraction, without listening to the talk of the magician, you just look into his hand, you'll be able to find what he is trying to do it. When he makes hand moves very fast, we fail to recognize. Then it appears an astonishing event or a surprise. So it is nothing but the magic happening in the market. They make a downward move before that of the rise, and upward quick move before that of the drop. The false move or a stop move, they make it before or after that of the data release. So if you just follow these things, you will be able to easily understand. Reading the market is not at all difficult. So one can ask the question, during the European session, I had taken a buy position, and I had further taken buy positions after keeping stop to protect the profit. That is called a summation. We can continue to add more positions after keeping stop at entry and provide, because once you take a position and keep stop at a higher level to limit the profit, if you take another position and you are only taking one exposure at a given time, the other one, if the market goes against you, will book profit. So it is not over trading. So always keep stop to limit the risk at entry or to protect the profit. And later on, you can commit one more position. Then you will not incur loss. And if you simply add positions when the market is dropping, suppose if they drop euro from 1.3558 to 1.3550, add one more, add one more, add one more. Then you find it is over trading, because you find that when more positions are taken, all the positions make loss, and you become really afraid, and really you find that your equity cannot hold such positions, you cut. So instead, take only one position at a given time and keep hedging order to limit the risk. And once the position makes profit, keep stop at entry. It doesn't mean that you have missed that opportunity, market has gone up. Your position tells you. Because now my position tell me that I taken a buy and the stop is not being hit, so I can take another buy. When they are making a small dip, as long as they are holding above that of the initial high. So if you make a very simple understanding of the initial highs and the lows, you'll be able to really make money from that of the market. So the current trade here, besides the first one, 1.3587, I taken a buy and they have gone to 1.3603. We can keep stop at entry. And similarly 1.6109, we can try to keep stop or tighten it or just keep it as such. Once they go above that 1.6124, slowly they will cut it. Cut the high, go above, cut the high, go above. As I explained to you, intentional move. And people might be thinking that they are holding and selling, but they are selling less and buying more and inducing the traders to sell and absorbing all the sells. That is why they are holding it. So when they are absorbing all the sells, they are not fools to book loss by making a drop. They will not allow the market to drop, and they will quickly gain the level the next day and induce all the short sellers to do the short covering the next day or the weekend. If the traders continue to sell and when they realize that they have done the over trading, automatically the traders come for the short covering. And in the rising market, the first one to come for higher level buy is the short sellers. And the second is the short sellers who just do the short covering and immediately buy in order to earn back the lost money. So only the emotional traders make the buy after the rise and sell after the drop. And we may call it as a breakout trade, but invariably such trades are dangerous because the players are also watching how the traders are committing positions, accordingly make the moves in the market and try to trap. So when you try to buy after the big gain, then you will find that they make show about 5-10 pips profit, and if you don't book profit, they will just show you loss and hit your stop. And there is no point in continuously lose your money by hitting the stop being hit. And that means you fail to read the intentions of the players. Suppose you want to become associated with a friend or acquaint with a person. First of all, you have to read his likes and dislikes. You have to find out whether you will be a suitable person and things like that. Only then you can acquaint yourself. So similarly, read the people who are operating the market or who are playing in the market. And they have got the big money power, but still they are human, so they have the limitations. Understand their limitations and then try to trade. Now let me come to that of the questions which are asked here. Then MRC has got a question. The high-low is for the session or for the day? The initial highs and the lows are for the day. Then subsequently they set the new low during that of the European session, new high during that of the European session. Then again they breach the high during that of the US session. So you will be able to easily read when you follow this low and the high of each session, what sort of moves they are doing it. Whether they continue to drop or continue to rise. Then what about, then Mohan Kumar. Before data release, a false move happened. But how much time before? Okay. Normally they do it from 30 minutes before the data release. And they make the moves very, very quick. Just about 1 or 2 minutes before that of the data release. So that it can really trigger your emotions. Then Mohan Kumar, what about gold? Gold is expected to slowly gain. And similar to that of Australian dollar, it has already undergone the multi-year trend reversal moves. Don't expect a big rise in one day in the case of gold. It has already undergone multi-year trend reversal moves. And you know that Aussie also came up to 1.10 level, and from there it has dropped to 0.87 and 86 and then started gaining the levels. So they are slowly expected to make the swings. So focus on swing trade. Don't go for long-term trades in the case of gold. And multi-year lows, highs, they will show again after a few years. Okay, fine. Thank you. So no more questions. So let me wind up the webinar. So I take this opportunity to thank all the people who have come here to attend the webinar and also FX Trade for giving the facility to present the webinar and recording it for the benefit of the traders. And my contact details are given here. My website address is given here. And also my email ID, Skype chat, and also Yahoo chat, my phone numbers. And I will come back on 10th, day after tomorrow, and give the Asian session live market analysis. Thank you one and all. See you on 10. Wish you all happy trading.